Hello, welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest is Peggy Martin, and Peggy is a financial planner with the Family Wealth Consulting Group. Through another company, now let's just say Peggy is also licensed
Yes. That's good.
as an insurance person. We've had some changes that have happened over the years. And anyway, so she offers a range of insurance products, including long-term healthcare insurance. And she has more than, 33 some years.
A lot of years.
A lot of years. She started when she was 3 years old.
Yes.
Right
around
in
then.
the financial services industry. Her father was a life insurance agent, so I'm serious when I say she started when she was 3 years old. Anyway, Peggy assists clients with family wealth planning, including legacy, financial, estate, investment, and insurance planning, and her credentials include a Master's of Science in Financial Services, Chartered Financial Consultant, Chartered Life Underwriter, she's Fellow Life Management Institute, and Chartered Advisor for Senior Living. So she's got a lot of education. Peggy, thank you for joining me today.
Mike, thanks for asking me. It's a pleasure to be here.
So for this interview, Peggy and I are going to be talking about long-term care insurance. And we're seeing, we may be getting sort of to the end. Now we're getting to the end of the great generation. And now we're seeing the first of the baby boomers that are getting into this area. And of course, there's a lot of baby boomers,
Yes.
including us.
Yeah, including us. Yeah. We're part of that cohort, yes.
Yes, so anyways, so long-term care is just, it's a concern for many families. And if you're not thinking about it, you should be thinking about it. I've done other interviews with attorneys and so forth, but today we're going to get this insurance angle with Peggy. I guess we'll get on with it. Peggy, why would someone even consider getting long-term health care insurance?
Well, when you consider that in 2017, it is projected that a semi-private room, which could be defined as 2 beds up to 4 beds probably, can cost $260 a day, which is roughly $8,000 per month. That begins to have a concern for a lot of individuals and their families. How are we going to be able to afford that kind of care, should that kind of care be needed? And statistically speaking, the older we get, each decade we live, the more likely we are to need long-term care in some form
And
or another.
people have been living longer, I think.
They have indeed. They really, because I look at my own situation, and I have a 96-year-old father
Yes.
who is still doing reasonably well, but there could come a time when he needs that 100% skilled care, and how do you pay for it?
Right.
Where do you get do you have the assets to pay for it? If you have the insurance, that's great, because it will help to pay for it. I've seen that happen in my own family, where the policy actually does pay the benefit if you lose the 2 activities of daily living: dressing, toileting, transferring, eating, bathing, those type of things.
Right. So, in addition to the care centers or whatever that you're talking about, there are some people basically that elect to have care in their homes, and I think that can be even more expensive.
Actually, home care usually is more expensive,
Yeah.
especially if it ends up being a 24/7 situation,
Yeah.
where someone is in your home helping you with medications. It becomes quite costly, and the better long-term care policies do cover the home health care, or the
Yeah.
home care for long-term care.
Right, okay.
And that's critical when looking at a contract, to be sure that it has provisions for both facility and home health care.
Right. So maybe we can get into that a little further then, or elaborate. What healthcare services are covered by these policies?
Okay, they're not medical insurance policies, so they don't cover you when you go to the doctor. They don't cover you when you go into the hospital for a surgical procedure. What they're covering is a chronic illness. something where typically you're probably not going to be getting better. Maybe you will become somewhat stabilized. But again, you have to lose those activities for daily living. You have to lose 2.
Okay.
And so again, typically they're bathing, dressing, toileting, transferring, eating. It's not ambulating. If you can, that is not one of the activities for daily living. So if you lose 2 of those, then typically benefits can trigger from a policy and start paying a benefit to you. And cognitive impairment. If you're diagnosed with severe cognitive impairment, then the policy will automatically pay.
Okay.
Now, when I say automatically pay, there is a qualifier there. There is an interview that takes place to be sure that you're actually have lost 2 activities of daily living, and you have severe cognitive impairment.
Right.
And the word severe is very critical. It's not mild cognitive impairment where somebody's saying, gee, you know, I just can't remember where I put my car keys today. That's not as severe. Yeah. So that's not considered severe. It's when you put the car keys in the freezer, maybe you're approaching the standpoint of maybe you do have severe cognitive impairment.
Okay. But you could just have the situation, for example, that somebody can no longer dress themselves.
Right.
And they can no longer really prepare their meals.
That is.
Then we basically.
Well, if you can't dress yourself, you're probably, there's 2 areas in dressing. There's the dressing, the physical dressing.
Yes.
And then there's the toileting, like being able to shower and do those kinds of activities. So usually if you can't dress yourself, you're probably also not able to do the toileting.
Okay.
Typically, you're going to lose.
So those are going to sort of go together.
Together, yeah.
Okay. 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 Who qualifies for this type of coverage?
Well, the qualification process is an application is completed, and then there is a medical review. And depending upon your age, there probably will be some kind of an interview. Could be by telephone, or again, if you're old enough, they may even want a face-to-face interview with you. And purpose of those interviews is to determine cognitive impairment.
Okay.
Are you able to, they may give you a list of words, and can you recite the words back, or can you make a sentence with the words? Those types of things. They're looking to see, are you already cognitively impaired significantly enough that they don't want to issue a policy to you.
I see. Okay. So in other words, you can't need it when you're applying for it.
That's correct. No. Again, it's like everything else. You need to be, again, proactive with it. Like when you're healthy is the time to consider it. And I think fortunately for a lot of the baby boomers, they've gone through the process of seeing aging parents decline and end up in facilities or have home health care people coming into the house. That hopefully that generation will do a better job of taking care of themselves and actually looking for options. I know I do get asked about long-term care from a lot of my clients right now that are typically around my age, slightly older maybe, but nevertheless, they are concerned about it.
Okay. Now comes to the sort of the nitty-gritty. Aren't the premiums like really high for these policies, and how do you justify the expense for the insurance?
Well, yes, the premiums can be significant. However, when you look again at the average cost for a skilled nursing facility is running about $8,000 in California, roughly. Yeah. Now, if you want to have your own room, the price goes up dramatically from that.
Yes.
Also, even in assisted living facilities where maybe you have lost the 2 activities of daily living, as an example, right now I'm paying about $4,700 a month for my dad.
Yeah.
In a facility, and he still has not lost those 2 activities of daily living, but there are people there that have. And you look at $4,700 per month and think, well, what of that amount could be paid by the long-term care insurance? It's not going to cover the rent for the apartment, but it will cover things such as the caregivers. What kind of duties are those folks doing for you, and how much is that costing you? So you have to look at, yes, it is expensive, but look what it's paying for.
Yeah. Well, it's like any insurance. I mean, you hope that you're not going to need it.
Absolutely.
and you're paying for it, And
you
so,
know,
you know.
you do hope you're not going to need it.
Yeah.
And yeah, it's kind of painful if you've paid a lot of premium into something and you don't ever get a benefit from it.
Yeah.
But the good news is you didn't need to go on claim.
Right. Right.
You know, so you got to look at why you're insuring.
Right. How are the benefits triggered and how are they paid?
Again, it is by the activities of daily living. And I can give my mother-in-law as an example because she did have a long-term care policy, and I was able to be present when it was decided it was time for us to look at submitting a claim for her and what that process was like. And a very nice woman, nurse, came out, interviewed my mother-in-law, and also had my mother-in-law do some physical activities such as wanting to watch her walk, wanting to see her like put a coat on and take it off, just to see what are her skills, what's her mobility, what's going on with her. And it was decided based on that interview that yes, indeed, because of the severe cognitive impairment,
Yes.
that she would qualify for benefits. What I did not know is that my mother-in-law had to go through this exam about every 6 months
Oh, wow.
to continue benefits. So that was something that I'm glad I was able to participate in that process.
Sort of enlightening, yeah.
Yeah, well, that way it gives me better ability to provide guidance to clients on
Right.
when they're looking at possibly purchasing this type of coverage. What do I really get for it? How does it work? And it was very helpful to see that, but it was also very, in a sad way, very rewarding to see that yes, indeed, the policy did pay.
Yes.
Because a lot of people have the impression that long-term care insurance will never pay. Well, that was not our personal experience with it. It did. And sadly, subsequent to that, about 2 or 3 clients that I have also written long-term care policies on, they have gone on claim as well. And it is paying. So it does pay.
Okay. Many seniors are members of AARP, which offers a long-term health care plan. Should they also consider other alternatives?
Yes, AARP does offer a plan, and I believe it's still through New York Life Insurance Company. And I also believe the maximum amount of coverage that can be purchased is up to $100,000.
Well, that's not that much, is it?
And that's my understanding of it.
Okay.
And I think very highly of New York Life Insurance Company. I think they are a very solid, stable, secure company. And it could be something where it is appropriate for the individual because they still have to go through medical underwriting, which is a review of the medical records and the application process. But it does give you something. It does. It's not very much, but it does give you something. And a lot of times people just want something to get started with, and they realize that it's not going to be the total solution for them, but at least it's a little bit of a nest egg for them. And so AARP could be an option for some people. It's not for everybody.
Okay. Do employers provide long-term health care as an employee benefit?
A lot of employers have provided long-term care insurance for employees. John Hancock used to be one of the companies that was fairly large and offering employee benefit type products. Right now I think they're working for the federal government. Under government employees can get John Hancock long-term care insurance. And that is dependent upon how long the government continues to hire them to do it. And I do know some of the larger companies historically have offered it. However, recently in asking some people that are working for some fairly large companies, are they offering long-term care benefits? Right now, no.
Okay.
So it depends. It's absolutely something worth asking your employer about. And the things you want to be real sure of is that it's portable, meaning that if you leave employment, you can take that insurance with you. It's your contract. You've got the benefit of a lesser premium because it's a group plan, but once you leave, it's still yours. That they can't come back and say, now, you no longer have the coverage because you've left employment.
So it's a little bit along the line of like COBRA for your health insurance. So when
Right,
you leave,
you just want to really be sure what you're
Yeah.
purchasing. And
Right.
usually, the programs or the plans that I have reviewed, they've actually been good, and they have all been portable. So
Okay.
it's just, but you want to ask those questions so that you're just not surprised when you leave employment, either upon the fact that you got a new job, you retired, or for some reason you got laid off, or you were terminated, that you still have the coverage.
So as we were talking about this before we started our discussion for your interview here, but I understand that there are some new combinations that are being offered that some people might prefer because, like we said, I mean, maybe you'll never have the opportunity to use your long-term care insurance, and then the premiums, you're not going to get any return. Your family isn't going to get any return. But now
Correct.
there are some alternatives where they do. Maybe you can talk a little bit about that.
Yes, I have actually been researching that as well, and have come across a product that I like. It's a whole life contract that has a long-term care insurance rider added to it. And the good news about it is if you never utilize the long-term care benefit portion of it, you still get a life insurance death benefit. Now, in some cases, depending upon age and how long you live, you may pay more premium into it than death benefit, but you're still getting something back.
Yes.
So whereas with traditional long-term care, typically, if you don't ever use it, you are at risk of not getting anything back, unless there's some, like a non-forfeiture benefit that is described specifically in the contract. But even then, it's going to be minimal, what you're getting back relative to what you've paid into it. The difference is, though, is that if you actually do have the long-term care claim, you could find that you may not have as many benefits on the long-term care side if you had the traditional policy. But again, it's giving you something to work with when you go on that claim, that you have income coming in to help pay for not income, but a flow of cash coming in to help pay for that claim. And I think there's something that is peaceful about that, just knowing that it's there.
Peace of mind.
And especially for adult children wondering, what do I do? Again, if you have one of these types of policies, there are people you can talk to. Like, what's the best resource here in the state of California in Santa Clara County? Can you direct me to somebody? Where should I go? Because there's nothing worse, and I had this happen with my mother-in-law, when you get a telephone call from the hospital saying, you got to find a place for her, like right now, today. And what you have to say back is, I don't have a safe place. You have to keep her till I find a safe place. So that's really frightening when you get that phone call. It's like, well, what am I supposed to do? Where do I go?
Yeah. So that's one of the things that some of these attorneys that are specializing in this area, they're also resources for these healthcare professionals and so forth, or safe houses,
Right.
and so on. And so the other, of course, is doctors can be a big help. So like when my father-in-law went for treatment related to, he was developing Alzheimer's, and so they started, my wife said, what are some choices, and it turned out that one of the nurses there had a family member that was in this particular care center, and she said, why don't you check this out? Our family likes it, and that's where my father-in-law ended up deciding to go, and we were lucky to get. He was the one who decided.
Yes, yeah.
Okay,
yeah.
we didn't put him there.
Yes.
He decided to be there.
He was agreeable to that.
Yeah,
That's great.
yeah,
that makes a big difference.
Thank God. So anyway, I know that's not on topic for long-term care insurance, but since we sort of bring this up along the way, I
Right.
thought I just throw those out as ideas for people because, like you said, people need resources,
They do.
and they are out there. You can find them, and not
And,
necessarily you don't have to necessarily pay an arm and a leg in order to get that help.
and there's nothing better than getting a referral from a nurse that had her own family member
Right.
there.
Right.
That really gives you, again, the adult child or whoever the family member is, confidence and, again, peace of mind.
Right. What is the California Partnership for Long-Term Care?
Okay, California Partnership for Long-Term Care is an organization and also an insurance product that has a component to it which is called asset protection.
Mm-hmm.
So a real simplistic example, if you have a $100,000 policy and benefits of $100,000 gets paid,
Mm-hmm.
if you are on the cusp of having to go on government benefits, they cannot go attack that first $100,000 of assets. That you still own that, or your family will still own that at your death. However, the partnership right now is going through maybe some growing pains.
Mm-hmm.
And to my knowledge, there is only a couple of companies currently writing the California Partnership Plan, which has led to a lot of us looking at these hybrid type products. Where do we go?
Uh-huh.
Because I'm an absolute advocate of the California Partnership Plan, but it's evolving
Okay.
like everything else does. It hit a pocket of time where the traditional long-term care is, I don't know if the struggling is the right word, but because these other types of products have come out where people are seeing, well, I get something back if I don't ever use this.
Right.
That's becoming a big appeal item,
Yes.
especially like to the baby boomer generation. They don't want to think that they've put in hundreds of thousands of dollars into a policy and they're going to get nothing back from it.
Right. Right. Okay. What should you do if you can't qualify for this kind of insurance?
Okay, that is a really good question. First and foremost is you want to make sure that you have estate planning documents in place and healthcare directives in place, but more importantly that you've also talked with your family members or the people that are close to you within your community about what your desires are. It's important to do that whether you have the long-term care or you don't, but when you don't have it, you need to have a network.
Yeah.
People around you that are going to help you. It doesn't mean economically that you're still not going to suffer. What it does mean though is you might have people that are willing to take care of you for a day, or help you prepare meals or do your laundry for you. These types of things when you're impaired physically or cognitively, that becomes really important if the community knows your situation, or some about your situation. Develop a network.
Yeah. I think another thing is just get legal advice. So there are these attorneys that specialize,
Right.
for example, in Medi-Cal planning and
That
so
is
forth.
correct.
And so, if you qualify for it, you should use it.
Absolutely. It's look at every option that's available to you, because there are people. Again, in my own family situation, we did use an elder care attorney for my dad, and it really has helped out tremendously that we did that. I'm very grateful that we did that, because the dollars that were put aside for him have been able to be used for him.
Right. And I've been in the situation, I think I've told you before, acting as a trustee for my brother-in-law's mother, who developed Alzheimer's, and then also helping with my father-in-law. But my father-in-law had the financial resources. It wasn't a problem. And in a sense, she did too. But again, they ended up being just a really good resource, one for finding that help. And also, again, what care center were we going to place her in?
Right.
and so forth, and then helping even when it developed that she was in a group center initially, and then she had to go into a smaller home because the care got too heavy for the larger center.
Right.
So, I mean, that was kind of interesting at that particular, but well, what did I know at the time? But she was fine. It all worked out well all the way along the way. So it was an educational experience, like you said. By doing these things, you and I, then it helps us. Not because we're legal experts or anything else, but just because we've got life experiences
Exactly.
that we can help to share with our clients. So that was rewarding in that aspect. And then by going through that other experience, I was there for my wife when she had to be there for my father-in-law.
Right.
So anyway.
No, the experiences build on each other, and it gives us more depth in being able to assist another on just having the appropriate empathy for what somebody else is going through. Understanding when they're saying, gee, I have to go take care of my mom again, or I have to go take care of my dad, or whoever they're taking care of. I have a very empathetic understanding for what's going on with them when they say that, because I've been there.
Right. Well, we're about out of time, Peggy, so maybe you could just throw out a final thought related to this area of long-term care and insurance.
My final thought is for families to communicate with each other. Talk about what's important to them, and if insurance is an option, definitely look at it, but talk about what's important. Understand what your parents or whomever you're working with, caring for, want.
Uh-huh. Yeah, so knowing intentions.
Right.
And writing things down.
Yes.
So make documents.
Yes.
It doesn't, for some of these things we're talking about, it's not a will. It's really, it's sort of saying, what are my intentions related to my care, and particularly
Right.
when I have a declining condition. None of us like to think of that.
No, we don't like to talk about it. It's leading up to end of life.
Yeah.
And that's where it's going.
Right. Well, folks, I hope that we've given you some things to think about, and find a good insurance person that is familiar with long-term care insurance. Not everybody is, and so you need to get that kind of advice, as well as getting good legal advice. See you next time on Financial Insider Weekly.